So we have those. So that question on your homework, if you haven't done it yet, free answer coming up. It's not a very hard answer, a hard question to answer. So we've got those 5 filing statuses. And filing status determines how much that standard deduction is. It determines tax brackets, so those marginal tax rates. The table that we saw earlier with the tax brackets, that was for married filing jointly. There are different brackets for every filing status, right? So that just applies to individuals who are married filing jointly. At the back of your book, I think Appendix F, which you now should be able to jump to as well, will show you all of those brackets. Okay. It's also, I think, somewhere within the text, within the chapter. All right. Oh, no, we're not going into it. Okay. Never mind. I thought I was going to go into the detail. That's why I was kind of surprised. Like, So chapter 2, we're going to go into more detail about what those filing statuses are. So it's really weird that they ask you in chapter 1. I should probably change that question. Asking you what the filing statuses are, because they don't even talk about it. They don't really talk about what they are in chapter 1, except I suppose you need to, if you looked at the tax return, you can see. And you're supposed to look at the tax return in chapter 1, you can see what those filing statuses are. Okay. All right. So this is just kind of a summary. I think I already talked about a lot of these things, but I'll look through here. So filing status, we talked about that. Your standard deduction is going to depend on what your filing status is. There are a lot of phase-out ranges that we're going to go through as well for credits and deductions that are dependent upon. Those phase-out ranges vary depending upon what your filing status is. Marginal tax brackets are different depending upon what your filing status is. So generally speaking, if you are married filing jointly, that is going to be the most favorable filing status. You're going to get the largest deductions. The marginal brackets are more favorable. The phase-out ranges are more generous as well for that filing status. Generally speaking, not always, generally speaking. All right, so we went through what's on line 1A, those wages, salaries, and tips. So that's whatever's on the W-2 form, that's going to then get transferred. That box 1 on the W-2 gets transferred to line 1A on the form 1040. What is this? Taxable interest. I showed you those other types of income that are listed there. And we're going to talk about interest income more in chapter 3. Other types of income, we looked at, I showed you where the dividends live on the tax form, taxable income from pensions, retirement funds, Social Security, as well as, and I didn't point it out, but income, well actually it's on the Schedule 1, that's why I didn't point it out. Income from self-employment is what I'm referring to. Additional income, I showed you those lines 7 and 8. Unemployment compensation. So there is this supplemental schedule. I don't know if they have it on here. Yes, there it is. Additional income. So there are lots of different types of income, and it's impossible to put all of them in that little spot on the Form 1040. So they've got a separate schedule with some specific types of income listed. Now, obviously, there are even more types of income than what are listed on here, and so there is a catch-all caveat for just other income. But we are going to go through this chapter 3. We're going to go through a lot more detail of these individual types of income. We're going to talk about taxable refunds. We're going to talk about alimony. Chapter 6, we're going to talk about business income and how to calculate that. It has its own schedule. So you start out with the Schedule C. Total bottom line number gets transferred here, and then that gets added in with other types of income and all transfers to the Form 1040. Other gains or losses, we're going to talk about that in chapter 7. That could be like sales of business assets and that sort of thing. Rental real estate, this is chapter 8. Real estate royalties, partnerships, S corporations, those are the flow-through entities. We do not talk about farm income, even though that is a big category of income in Iowa. So if you end up preparing tax returns for a living in Iowa, chances are you will do a lot of farm returns. They have some special rules, but we don't go through that in this class. Unemployment compensation, we talk about that in chapter 3. These other types of income, net operating loss, gambling, cancellation of debt, we don't really talk about those. Jury duty pay, we don't really talk about that. But you can see they're all, all sorts of different types of income that have special rules. So you can get really down in the weeds with all of this. And then here's the catch-all, other income. Okay, what is it? Other income. You add all of that up on this form. Line 10, you total up all the other income, enter it here, and on form 1040, line 8. So let's go back to that 1040, line 8, where it would go. Right here. Additional income from Schedule 1, line 10. I will give you a hint about these forms. The instructions are all there on the form. You just have to read it. And you have to read every single word of it. So it tells you what to do. It tells you what type of income. I mean, this is a good example. And it's telling you, where does this information come from? I have other gains or losses. Did I fill out a 4797? Okay, well, I guess I have to enter something in there. I have to go back to the 4797, and then it will tell me on the 4797, it will say, enter this amount on Schedule 1, line 4, part 1. It will tell you exactly where to enter it. It will cross-reference for you, and the information is there. So just like this, where it says, enter your additional income, enter it here, and on whichever form you're using, and the line number. So it's there for you. Second part of the Schedule 1 are those adjustments to income that I talked about. Those special deductions that are called adjustments because they affect adjusted gross income. Okay. All of those are listed. We have a separate chapter for all of these that we're going to talk about. We're going to talk about educator expenses. We're not going to talk about business expenses of reservists. Health savings account deduction, we're going to talk about that. Moving expenses for members of the military, we're going to talk about. Deductible part of self-employment tax, we're going to discuss. We're not going to really talk much about the SEP simple or qualified plans. Self-employed health insurance deduction, we're going to talk about that. We're going to talk about penalty on early withdrawal. Alimony paid, I just talked about alimony up at the other one, that's alimony received. Because that was income, these are deductions. So alimony paid, we're going to talk about that. Student loan, we don't talk about the IRAs too much. Student loan interest, we do discuss that. And I don't think there's anything else that we really go into. So we talk about the most common types of adjustments that are used, okay? That's part 2 of Schedule 1. You don't need that yet in Chapter 1 homework. You don't need any of the Schedule 1 stuff, but you will start to need it. I don't know if it's in Chapter 2 yet or not. Certainly by Chapter 3, you're going to be looking at the Schedule 1. Maybe it's Chapter 4. I don't know. I can't remember off the top of my head. Okay, so a lot of you are familiar with these types of forms, 1099. We talked about 1099s in payroll accounting. We talked about W-2s. These are just examples of what some of them look like. I don't know why they put this one first, but 1099-G is for government payments. Unemployment shows up here also. State and local tax refunds. If you ever received a state income tax refund from Iowa, has anybody received one of those? They come on these little postcards that you have to like tear them apart and everything. It doesn't look anything like this. These forms are not They are not standardized. They don't have to look like this, and this is one of the things that's kind of annoying when you're preparing taxes, is that these forms don't all look the same. But they have to contain the same information, but it can be in a different configuration. So just keep that in mind, that when you're looking at these, if you've seen other forms with the same name, the same form number, but it doesn't look the same, just know that it doesn't have to look the same. So it might look a little bit different in real life or in different situations. So that's just a 1099-G. Like I said, I'm not quite sure why they give you that example, but and taxable income review, so. All right, so that kind of gives you a rundown of the first, well, the 1040, which, like I said, is a summary form. Got 2 pages to it. Front is income and deductions. The back is tax liability, payments that have been made and credits, and the calculation of what taxes due or any refund that you're entitled to, that the taxpayer is entitled to. There are hundreds, if not thousands, of supplemental schedules and forms that can go along with these. That 1040 is just the summary, okay? Other forms, everything else, every other form or schedule eventually bleeds into, carries into that form 1040 somewhere, okay? No questions? All right, let me see if there's anything else here. Don't think so. I went through all of that. Tell you what.